June 26th, 2025. The day started with a gap up to around the all-time high. I am using the continuous ES chart. It's just what I always use. So the all-time high on my chart was very recently. It was basically 60.86. Or I'm sorry, I meant to say 60.66. So it was in this area. We basically gapped up to it. We had two small legs up on the open. Again, whenever you get a gap, you should expect a second leg up from the gap. Today ended up being a bull trend day. We've had a lot of trend days this week. Not a very active day for the 3-bar micro channel, only 4 setups. So a relatively slow day for me. This happens every once in a while. Like once every other month, you'll get a day where you get like 2 setups, 1 to 2 setups. I thought this might be that day. We obviously ended up getting a little bit more with a couple setups later in the day. And later in the day on trend days, micro channel will often end up being a loser. Looks like this might be the losing trade. We'll just leave the stop there, see if it hits it. I don't even think it got a half an R yet, which it would be pretty rare if it doesn't get a half an R after getting immediate follow through. So I wouldn't be surprised if at some point we bounce and get a half an R before we get there. But this is a third leg down. Some traders might look to be buying right now, buying this close with some sort of wide stop, basically betting against the breakout on bar 64. 59 is buying high, but it's still an untested magnet. So some traders might be looking to buy in this area. Where do you put your stop? I don't know. Bar range, maybe somewhere down here. If you're buying down here, you're trying to get back up here. So your risk reward is pretty good and your probability is decent as well. So probably pretty okay to be buying. You might have bought the 55 low, might have been a good area to buy. And you're looking to get back up to this area by probably the end of the day. But you really don't want to see 64 get a big follow through bar. So if we start to sell off, let's say 64 looks like 62, then you just get out of the trade. Otherwise, you hold. 4, a big bear bar, but a large tail on the bottom. It might be enough for a second leg. This is a tight trading range, not really all that good. 5, 6, 7, 3-bar micro channel. I did buy the close of 7, and I bought more below 7 at a 25% pullback. Disappointment on 8. You could add on the close of 8, 9, 10, and 11. 3-bar micro channel. You can see we got a symmetrical second leg up right here. So I had bought and scaled in, and I got out up here. I did not add on the close of 11 just because that's not really my trade. I thought that, not that it's not my trade. It's just I was already in a trade and I didn't really want to add. I don't usually add in my 3-bar micro channel. I did a study where I was doubling down on stuff, but and it still makes a lot of money. It makes more money, in fact, but I just have trouble adding to trades like that when I'm already in a trade. I prefer to just take my one trade. So I got my second leg. We entered the channel phase. 14 and 15 is the start of the channel phase. So we had a spike, a pullback, and then we had a channel. Not surprising that 25 tested the bar 15 close, as that is the bottom of the channel. 25, 26 consecutive bull bars closing near their highs. Some traders might look to buy. It's reasonable to think that we're going to get back up above the 23 high. 24 is a big enough bar, though, that will probably go a little more sideways first. So we're probably not, if you're buying in here, we're probably not going to go straight up just because of the sheer size of 24. Odds are we're going to go a little bit more sideways rather than straight down. 4-bar micro channel to bar 28, probably buyers below. You can see there were buyers below. And then a reversal back up, 29, 30, 31. 4-bar micro channel, and then sideways. Again, really difficult. At this point in the day, I was a little bit checked out mentally just because of the fact that we had, an early trade and then nothing until bar 49. And the problem with buying over here, the problem with trend days with the way that I structured my system is the two areas. So 80% of the failures in 3-bar micro channels occur in one of two scenarios. It's either a late leg or you're trading against, a parabolic wedge or some sort of strong move. And if you're buying anywhere in here, you're buying a late leg. And if you're selling any sort of reversal down, you're selling against a really strong move. So what I should have done was basically once we started doing this, I should have just walked away for the day. I was borderline ready to walk away. We got 57, 58, 59. And I bought the close of 57 during 60, which after 5 straight bars, it is, three pushes up, 1 pull back, 2 pull back, 3. So it is 3 legs up on a smaller time frame, but it was enough that I thought, it was a 5-bar micro channel, so I thought we'd still get up here. I still think we might get up here. This is a tight channel down, so look at a 15-minute. It's forming a 3-bar micro channel. But I basically, if 60, closed strong, I'm supposed to exit below 60. I did not exit below 60, which was very silly of me. I was tired and I should not have been trading at all, but instead of exiting below 60, I waited for 61, which it didn't trigger, but I should have still kept the stop loss below 60. Put the stop loss, at the 150%. Then when I got 61, I wanted 61 to close in the upper third of 60. It did not, and now 61 is a low probability high 1. It's a swing trade. So again, I should have exited. I did not. When we got 62, I basically, I was pretty annoyed with myself, but as we bounced above 63, I exited around the 59 close. So I lost maybe a 1.5. It wasn't very much, but it was more than I should have lost. I should have lost nothing because that's a late leg. And, my system is basically works if I don't trade late legs, and it works if I don't trade against parabolic wedges and such. So pretty annoyed with myself for that, but that's the first real execution mistake I've had in a little while. So, and it didn't cost me that much. So I guess I can live with it. But trend days, I usually am not in the market on trend days very much just because of the nature of them. So as far as the daily chart, you can see we broke out above the bull channel, or we're breaking out above the bull channel. And we are, again, like I said, we are at the all-time high. On my chart, we're at the all-time high, at least. We broke out above it. So for about 4 CC, expecting another leg up. Maybe we come back and test the 616 high, but 4-bar micro channel should be buyers down here if we do. And then obviously a really strong bar on the weekly chart. We're breaking out above. Bulls want to see follow through. But all right, I didn't have too much to say on the day because it's not a very interesting day for me. But that's it.